Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. Now in studio with me, I'm joined by Ashton and Henry Biddlecombe, both from Anchor Capital. Today we're talking Sun International, Africa's largest tourism, leisure and gaming group, which operates or has an interest in at least 27 resorts, luxury hotels and casinos across 10 countries. Always good to have you with us, gentlemen. And Sun International, one of those companies, again, that most South African consumers are familiar with. But I think the understanding of the various operations is actually quite intense.
Yeah, and I think this is the classic out-of-favour asset in an out-of-favour industry at the moment. You've had the gaming market in South Africa, and bearing in mind this is 80% a casino gaming business. So when people think about hotels, it's really quite a small component of the overall group in terms of demand and revenue and profit. But really, you've had pretty much 5 years of moribund conditions in the casino industry in South Africa. Not much growth in gaming spend. It's linked to the consumer. Margins have come under pressure. They've had to do restructuring exercises to try and save margin. But I think for us, the attraction is you're at a point in the valuation and business cycle where we think you're paying quite a low multiple on fairly low earnings, with some potentially big kickers coming in the next year or two, and specifically some new casino developments that are in the pipeline. So to us, it looks quite interesting right now.
We do have a graph which compares it to some of the competitors in the environment, Sun as well as Phumelela Gaming. How does the environment fare at the moment?
So I think the environment's tough for everybody. I mean, I would say that the horse racing side of things is a slightly different dynamic to casino gaming in the case of Phumelela. So they do have some international punters that come through on that side. But I think to focus on the Sun International side of the story, you've effectively got a business with fixed costs, it's largely property related in nature in terms of the asset base. Fixed costs, you've got salaries that go up at 7 to 8% per annum. You've obviously got rates and taxes that go up. So you kind of need to have gaming revenue growth of 6 to 7% to be able to sustain margins. A rate of increase below that, and you've got a margin squeeze on your hands. And that's certainly what's been the case in the last couple of years, and continuing on into the current financial year. So they'll be down for the full year. But interestingly, the attraction for us is that I think it's multi-pronged, and Henry will touch on some of the details. But certainly, probably the biggest kicker coming in the next couple of years is this new development that they've got in Pretoria called Menlyn and Main, which is going to be pretty much the same size casino as Monte Casino, and it could well add 30% to group profits.
Sure. Tell us a little bit more about that, Henry. I understand also moving away from another casino that they had further north of Pretoria, if I'm not mistaken, but this is going to be the main attraction, as Sean has alluded to.
That's right. So they've successfully applied to move their Marula license to the Menlyn Main development, which is almost like a mini city development taking place in Tshwane. And this is really going to be the casino to end all casinos in South Africa. It's of a similar magnitude to Monte Casino and Emperor's Palace, but it's in fact a little bit bigger. It consists of about 1,800 slot machines, about 70 tables. They're going to have a 5-star hotel on the premises, and there's going to be a full suite of entertainment and restaurateurship in the same building as well. But that's really one pillar of a sort of 4-pronged investment thesis that we see for the share, and that's really the first and the most important. But there are 3 others. The second being the group's expansion into Latin America. The third being the turnaround of Sun City, which we're all familiar with. And then the fourth being the successful defense of their sort of geographic exclusivity in the Cape with their Grand West casino operation.
Keeping with the Menlyn Main establishment, I understand you've also produced calculations as to what it's worth, and from a net asset value perspective, 31 Rand odd?
That's right. So, I mean, we think that ultimately that will contribute around R1 billion in EBITDA to the group. And in addition to that, they own the management contract for the operation, which equates to about R100 million in EBITDA per annum. So we've capitalized that, and we've deducted the debt in an EV/EBITDA multiple calculation, and we arrive at a fair value of that entire operation of 31 Rand a share. Now that sort of valuation becomes compelling when you consider that the share is trading at just 75 Rand today.
What about the Dreams merger? I understand looking to expand in the Latin American market rather, and they already have an existing operation in Chile, if I'm not mistaken.
Well, that's right. So the board have taken a view that they'd prefer to expand their operations into geographies where the economies are growing a little faster. Where the consumer is a little healthier and where the consumer has a higher propensity to blow a little bit of cash on gambling. And they've made quite a successful foray into Chile with an operation called Monticello, and they've got relatively new operations in Panama and Colombia. They've taken a cautious approach where they've gone into mixed-use developments where they really only operate the casino. They don't own the hotel and they don't operate the restaurants. But now they've taken it one step further and they've decided to merge that operation with an established operator in South America called Dreams. Now, the merged entity will consist of about 13 properties, about 6,500 slot machines, 300 tables, 25 restaurants and 6 hotels. And that should contribute around $100 million in annual EBITDA to the group, of which Sun International will enjoy a 55% equity interest. Importantly, they've segregated the South African balance sheet and the South American balance sheet to the point where they're sort of trading at the limit of their debt covenants in South Africa, but in South America, they've geared the balance sheet to about 1.5 times EBITDA, which is fairly conservative. They can probably take that up to 3 times. And the reason they've done that is to allow for further expansion in that region.
So slightly more cautious approach than, from what I understand, the South African market, as you say.
That's right. Although I think now that they're partnered with an experienced operator in that region, I think they're now equipped to go and take more risk. And I believe that there is a potential project in Peru worth about $200 million, which could ultimately end up being of a similar scale to Monticello, which could contribute up to 500 million rand in EBITDA per annum once completed.
Let's come closer to home with both the Sun City renovation together with the Grand West Casino. Sun City, a lot of investment given the upkeep and as well as renovations there. But Grand West, I understand, also faced a bit of competition from some of its competitors in the industry with regard to licensing and establishment of new casinos, if I'm not mistaken.
Absolutely. So Grand West has enjoyed a geographical exclusivity for, I think, something like the last 10 years or so. There's obviously the potential for new licenses to be issued in the region. I think Tsogo Sun has been bidding for a license there. And in fact, they've now taken a 20% stake in Grand West. And the issue now is that Sun International is busy negotiating with the Gaming Commission or the provincial gaming regulator to extend their exclusivity period for Grand West. And we believe that could well be successful. It's not going to come for free because ultimately that's worth something. And if a brand new casino coming into the Western Cape, specifically the Cape Town Metropole, could have the potential to halve the EBITDA of that particular property, which is their biggest property currently outside of the new developments that we're talking about. So the risk, and I think something that's embedded in the share price from a valuation point of view, is this concern that you'll have new competition coming into the Cape Town market and pushing down their profitability. We think a more likely outcome is that they're going to write a check to the regulator, either in the form of an additional license extension fee or capital commitments, community projects, etc. A not insubstantial amount of money will be paid, but ultimately something which will make sense for them to extend the exclusivity of that license for a couple of years.
Well, let's get our views now from our experts, whether to buy, hold or sell this particular stock. Henry, let's get your view. Buy, hold or sell Sun International?
Well, Gugu, looking forward, we believe that in 2017 they should be able to earn around R9.50 per share, and in 2018 around R13.50 per share, which places the stock, which is currently trading at 75 Rand, on a very low forward multiple. We would think that a fairer multiple to place on the share would be around 10 times. So it wouldn't be unrealistic to have a sort of 2-year target price on the share of 130 to 140 Rand. So certainly on that basis, we buyers of the share.
From your view, Sean?
Look, I think that one needs to place it in context. The share price was 130 or 140 sometime like this time last year. They'll make R7.50 a share, let's say, worth of profits. You're paying more or less 10 times earnings on this year's earnings base, which is reduced. And that doesn't take into account the fact that you've got a brand new casino facility in Pretoria that we think could add 30% to the profits of the business over a 2-year period potentially. That alone we're saying is worth anything from 30 to 60 Rand at the very top end, because I think the EBITDA could surprise on the upside to what we've spoken about, but that's for another day. But I think conservatively worth 30 Rand a share and can potentially add 30% to profit. So I think you're buying it at a low multiple on low earnings with some potential kickers coming through. I don't have to stretch the assumptions that we're making to get to 130 Rands a share worth of value.
Really?
So for us, it's about timing, it's about patience. I can't tell you when it'll re-rate, but I think there's significant value in this business. I think the risks that one needs to obviously talk about is the fact that it's quite a highly leveraged entity. So there's about the debt levels will peak at about 10.5 billion rand. The market cap is less than, well, it's about 8.5 billion rand or so. So clearly the market's saying there's a lot of debt relative to the equity, and if the existing operations continue to bleed out EBITDA, that's obviously a risk to the overall valuation of the group. But we think there's enough of a kicker coming through from new initiatives at fairly high return to actually justify a higher valuation.
Well, we'll leave it on that note. Quite optimistic on the spread as well as management of risk with regard to Sun International's operations. Well, a big thank you to both my guests today, giving us a buy recommendation for Sun International Holdings, Sean Ashton and Henry Biddlecombe, both from Anchor Capital. Do join us again next time where we talk more stocks.